Gold, let's go. Let's go. We finally got the move on gold. Little P&L check. Do we hit 2K? We're close to 2K on this trade, which is awesome. And man, I can't, this one we waited on for so long. This one was like watching paint dry for a long time. But that's the thing about markets is like when you have consolidation, a lot of people, myself included, start to get really bored, right? We're like, nothing's happening, nothing's moving. And then one day you just wake up and markets are flying higher. Why? Why is gold up so much? Does anybody know? I'll list off a couple things on why gold is up today. ECB cut rates. All right. ECB rate cuts. That's the European Central Bank. They cut rates. What else? CPI and PPI this week. What were those like? They were cool, right? Cooling inflation. Central banks cutting rates. Why else is gold up? Yesterday, some of you guys might have missed this one. I saw this in the news. There was some sort of thing that leaked. I don't know, I don't know if it was a leak or whatever, but there was some statement or something said that basically 50 basis points is arguably still potentially on the table next week. What are you saying about BP? What do you, if you're new to this stuff, BP stands for basis points. It is a fancy way of saying 0.5%. 50 basis points is 0.5%. So they're talking about potentially cutting 50 basis points next week, which does a lot for gold. Gold excels in more rate cuts. You're seeing right now, why is gold up? Rate cut city, right? That one's for you, Lee. I saw your comment. John Cena music. Yeah. HMH has it right. It's in the FedWatch tool. We see yields lower. Why do you see yields? You don't even have to go to the FedWatch tool. Just look at yields. Yields lower, right? This is why gold is bullish today and yesterday. You want to know why gold is bullish? It's because rate cuts are expected. Now, why isn't the market cheering and celebrating? Well, it kind of did yesterday. So I guess you could actually say the market cheered the 50 basis point potential yesterday by shooting up and continuing up. I actually don't want to see 50 basis points, and I've said that a lot. I still actually think they're probably only going to do 25, which I had somebody in my group this morning send me a DM. They said, Nick, is it too late to join the gold trade? And my gold entry here is looking quite amazing. I really wish I had more trades that looked like this. Well, if I was really a genius, I would have gotten it on this retest, because then I wouldn't have had to wait so many weeks here. But the answer to that question, is there still room for gold to go higher? I think sure there is, but the risk to reward is no longer there. So I know that FOMO can feel very frustrating. Trust me, I've actually been going through it this week with the indices, because the indices have been ripping higher. I'm not in them. I'm feeling FOMO big time. That being said, I know there's a lot of people right now who are watching gold and they've got a bunch of FOMO. They're like, oh, gold finally breaks out, makes a move, and I'm not in the move. I'm not in this ginormous move to the upside that feels so bad. Trust me, I know. I feel that way this week with the indices. Like, I got stopped out of my S&P trade right here. So it's coming from a place of, I know your frustration. I feel it. It is very familiar. And I've felt it on and off for my entire trading career, the last like 8 years of my life. Like, FOMO's real and it never goes away. If you can't get used to it, if you can't accept that it's gonna happen to everybody, then trading's not for you. It's hard, but it's consistently going to be a thing. FOMO is always going to be there. All right, so now that we accept FOMO is always going to be there, is there a trade here? No, there's nothing here for me, right? According to my trading style. You might have something different. You might trade differently than me. But for me, there is nothing to do here. Can I short this market? Is it overbought? Are you kidding me? Come on. We don't short moves that sound like this. Right? That's the sound effect. That's the sound effect for gold right now. If you were to go into, like, picture gold as like a speed racer flying down the highway. If you were to go into his car, I'll play that sound one more time. This is what you would hear inside of his car blasting on the speakers. It's so cheesy. So stupid. But maybe you'd also hear this. You'd hear the perfect candle sound.
Perfect candle. That green candle right there.
I'm messing around. But there's nothing to do here, right? There's nothing to, you can't, in my view, in my book, I can't short this. What am I going to short? I'm shorting into a massive bull train rally. Why would I short that, right? There's nothing for me to short. There's no context. There's bullish catalysts everywhere on the fundamental side right now. Now, here's an acceptable, in my view, thought. Okay, Nick, you think that next week they're going to do 25 basis points. Market is rallying on, sorry, I wrote that wrong. Market's rallying on the idea of 50. So if you think they're going to do 25, why don't you take profits on gold? It's a fair question, and I'm challenging myself with that because, again, I think next week that they're probably going to still do a 25 basis point cut, which would make gold not look so attractive. So why don't you take profits? Because personally, I don't trade that way. I don't trade based off of, I use price action to guide me in and out of positions. So even though fundamentally I am neutral on gold here, price action's telling me a different story. Price action wants to run right now. All right, let's run. And what that means is that if we put any higher lows in, the stop loss is coming in. It's coming right behind this thing. And I'm just going to let gold do its thing. Because what if we just rally into year end? What if we do get 50 basis points and I'm wrong about that? I would love to be wrong. 50 basis points happens and I'm just riding that rip.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
I was also looking at the put call ratio here this morning. This is one of my favorite indicators on the Edge Finder. It's actually probably one of my favorite pages. So the put call ratio just weighs the volume of puts versus the volume of calls in the stock market. And this gives me such a good insight into where things are at. And I want to talk about the indices because I mentioned it earlier. My opinion on the indices, I've kind of like, well, let me just say it this way. I'm bullish on the indices again, because what we can see here is I got cautious because of seasonality, which I still think is valid, but I'm back to kind of cautiously bullish because look what popped in on the Edge Finder today. NASDAQ and S&P 500. Okay, so this might be where I just kind of take a hit on my pride. I thought I was fancy. I thought I was smart for getting all bearish on the indices, but maybe that was the wrong call. My system is telling me it was the wrong call. Well, I was never bearish. Let me actually step back. I never outright said that I'm bearish on the indices. The only indice that I'm actually bearish on is the Nikkei, which I've been short. Which here's the Nikkei trade, 4-hour chart. If we trend lower, I'm going to trail stops on this one and try and lock in a profit pretty quick. But for the S&P 500, for the NASDAQ, these charts, I was cautious on the last 2 weeks. And when I say cautious, it was because in the month of September, we've discussed this over and over, seasonally, it's a weak month for stocks. So when you look at the Edge Finder score for S&P and NASDAQ and Nikkei for that matter, you can see that we're getting in that category a -2 score for seasonality. All right, so that was part of the reason why I was cautious. It was dragging the overall score down on the Edge Finder. But inflation data came in pretty positive. Retail sales, the latest figures, which we get more of that next week. Latest figures have been pretty good. We take a look at employment data. Unemployment rate is in a, it didn't go up. That's a good sign. It actually came down relative to forecast. Jobs data, jobs added were a little bit weak, but we'll take that. Interest rates are expected to come down. GDP has been beating expectations. Trend has flipped to the upside, which is part of the reason why the bullish reading has come in. Services PMI, stronger than expected. Manufacturing PMI, weaker than expected. So when I look at this, and actually, maybe I should have just shown you this. Let's go to the stock indices page. I built this wonderful table here for us to do exactly what I'm talking about. We go through this really quick. You can see GDP stronger than expected. If this is blue, it means good. If this is red, it means bad or pink. Most of these things are blue, right? Core CPI year over year. That actually should be month over month. That is month over month data. So ignore that. I'm going to fix that. If core CPI year over year was 0.3, then we'd be in a major deflationary recession. We're not in that. All right, so jobs data added was a little bit weak compared to forecasts. But there's some things you can look past because we've got, again, interest rates expected to come down. Seasonality takes some points away. That's why I've been cautious. But with the trend flipping bullish, price action's telling me, okay, right? Price action is looking strong here. NASDAQ and S&P 500 are on a nice little win streak here. This is going to be the potential fifth day higher if we do see a green close. What are your thoughts this week? We had inflation data, which showed some cooling. I'm curious, are you bullish on the indices? Are you cautious? What are your thoughts?
Actually, we had some very great events, I can say, or economic news. So they show us that the economy it's slowing down, but not as aggressive as we thought, because we saw even core CPI went a little bit higher to show that people are still spending here and there. So I think just because we're going on the interest rates week or FOMC week, I think we are going to see maybe 25 basis point cut. That's why we no longer see the market running like before. But I think it's a very good thing because that actually takes out the panic, the thing that we thought maybe is going to be a panic mode from the Fed. So I think 25 basis points is way much better than 50, because 50 sounds good, but maybe the market was not going to like that, because that will show the weakness of the US. So I think, at the end of the day, I think it's a good move from the events, and I think 25 basis points, I think that will be a way to go. So I'm actually bullish, but I don't see the market flying like before. I think the market will end up going quite slower. Already the market did move very nice.
Okay, fair enough. Yeah, no, it's made a big push overall here in the last few days, and as we count down the days to the Fed meeting, we'll have to see how it all shapes up. Inflation this week, I would say, as you kind of highlighted, it was pretty good, right? It was a good sign of cooling inflation, which gives the Fed more room to potentially cut rates. Speaking of oil's been on a big downtrend here recently. Do you have any thoughts on oil? Do you think it has room to go higher on that news, or do you still sort of think the downtrend can continue?
I don't think it will continue. On my side, I thought maybe we will reach maybe 63 because that was the area that I thought maybe if we check on a daily time frame, we had that zone before for previous moves. Here, I think maybe this platform is quite slower. Around this area, we had a very nice support area. So I was thinking that maybe the market will be touching that, but I think already the market did not really reach there. But I think it's a very good area where we can say we did find that support. Mm-hmm. And I think last week, OPEC countries did meet. So they were actually talking about cutting production of oil. So that obviously it will lead to price increase. It might not really happen now, but Going further, we will see a bounce back on oil, obviously. So, but maybe not now. But the overall structure, yes, I agree. We are on a downtrend structure. So that maybe might continue for a while. But at the end of the day, once they cut those production, I think we will see the market on oil going higher again.
Yeah, and that's the other question is if they start to cut rates and it does act to kind of stimulate the economy, perhaps that could reaccelerate demand for oil again. Remember that with oil, there's the supply side and then there's the demand side. Supply side would also be kind of categorized into it the like war and uncertainties about what's going on in the world, because that could spike the demand, but also really hurt the supply. Like if there's sanctions and embargoes and all those sorts of things, that can reduce the supply of oil, which in turn causes prices to go up. So we'll have to keep an eye on that situation, and of course keep an eye on the price of oil, because the other thing too is that remember that a big jump in oil prices could also act to undo some of the inflation progress. If oil prices were to go on some sort of big uptrend, which maybe this is something we'll talk more about like next year when the Fed has started to cut rates. If you get a reacceleration in the economy, inflation could start to reaccelerate as well due to higher oil prices, due to activity. So I feel like once we get past the process of the economy perhaps bottoming out off of rate cuts, and we start to see reacceleration, we may start to debate and discuss whether or not inflation will come back or not. So lots of stuff to continue to watch for as we go into the end of the year. But again, should be a really big week next week with the Fed's first rate cut. What else are you looking at? Are you looking at any currency pairs or the dollar or anything?
Maybe on the currency pairs, I think I was on GBP, which is trying to bounce back. So actually I've been bullish, but it's been playing around because of CPI and the other economic news. But at the moment, I think it's not really easy just to jump on one thing, because every pair that we trade at the moment, just because there is high impact news, they tend to move like aggressively. There's crazy reversals here and there, and it's easy to lose if you just want to trade, you see.
Sure. Yeah, no, and the dollar's been kind of an interesting one to watch with expected rate cuts. Dollar's been overall trending lower, but now we're starting to see other places cut rates like the ECB, etc. So we'll have to watch those pairs closely.
The 10 and the 2 year, so we are disinverted. There's about 6 or 7 basis points here disinverted. The 10 and the 2, we've come out of that longest inverted yield curve in history. The disinversion is not necessarily great for stocks historically. If I zoom in, what I'm looking for, and this also may happen after the Fed, okay? If we see a steepening, I think that is the best thing for the market to continue to go higher, okay? And I say that because there is a really good correlation between the inverted yield curve and the disinverted yield curve with labor, okay? When we have been seeing the trends, and you can see this in the A1 Edge Finder, when you can see that employment data has been showing jobs are slowing, JOLTS jobs openings are slowing, wages are flat, and you look at what are the other metrics? Unemployment rate has been creeping higher, right? Jobless claims have been steady, okay? But numbers overall have not been great. So my point is, when we went down into the inverted yield curve, that was actually employment numbers were getting better. That was a tighter labor market. As the employment numbers have gotten worse, this is where we're coming out and showing that disinversion. Okay, so this is something to watch. What I'm saying, I see you, Frank. What's up, dude? If we go steeper and we get back to this this inverted area, that's probably a good thing for the stocks to have legs to the upside. In addition to the dollar getting weaker, to me, if I'm putting puzzles together and I'm saying these are the major catalysts that I'm watching for, I think that employment has to get better. And we're going to see if this gets better, and this would actually be a steeper yield curve, and we go back to inverted territory. If that happens, that does help fuel the stock market as well as a weaker dollar. Otherwise, if this continues to drift higher, that's not a good thing. Historically, coming out of that inverted yield curve doesn't bode well for stocks. So between the dollar and this 10 and 2 yield curve, employment data and inflation data and what the Fed's going to do next week, all that's going to be on the table for us to navigate. So Frank, I saw your post this morning, dude. That was pretty incredible. What do you make of this 50-50 now?
Yeah, I'm not really sure. My question in that Discord was why cut 50, and I was talking to Nick about it too. Maybe they're behind. I don't know. Maybe the Fed is realizing that they actually do need to cut more aggressively. I mean, these are changing very drastically, so in the next few weeks, this could come down substantially, and we can see a majority 25 basis point cut probability. But to see it this morning, it went all the way up to 49 and 51, and then it kind of settled around here.
Okay.
This is 45 and 55 on my screen. But you know, the numbers are constantly changing. So let me share my screen now so you can see what I'm looking at. Okay. So because they're just all over the place, it's hard to tell. But the fact that it's close to even is pretty concerning, because I don't think a 50-point cut is a bullish sign. I think cutting because you have the luxury to do so is dovish. So cutting by 25 basis points is a good thing, in my opinion. But now that labor has cooled down as hard as it has, maybe the Fed is realizing that they really do need to step up and they need to come in and save the labor market. That's not a good sign, in my opinion. And now we're at near all-time highs on the S&P. I'm not exactly confident in this. So if we do test the highs, we go back up to 56, 70-ish, or a little lower, whatever. Mm-hmm. I may look to, sell some credit spreads above price. Stay out of the way, but I think there's limited upside here. But
I do too. I mean, I think price is going to be okay. So I was at the gym yesterday for about 2.5 hours and listened to an interesting podcast. This guy.
Why are you at the gym for 2.5 hours?
Because that's what I do, man. No, it's because I need to freaking de-stress every now and then. I need to cleanse, and it's if I just sit on my butt all day, it's like I could be a sedentary trader and just get be like the South Park guys when they're playing World of Warcraft. And just sit there and have somebody bring a bedpan to me. So I need to get to the gym.
What do you do in that amount of time? Like, I feel like I would run out of things to do if I was focusing on one thing.
Yeah. So Stairmaster for an hour, rowing for 30 minutes, lifting for another probably hour. Yep.
An hour Stairmaster.
Yep. But this is what I do. I listen to podcasts. I listen to financial podcasts at 1.5 speed, and I just consume as much content as I can in the time. And so the reason I stayed yesterday was one was almost done. I'm like, I'll do a little bit more, and I just lingered for another 15, 20 minutes. But yeah, that's usually what it does. So yeah, it's like once or twice a week. I try to just enjoy the time. So make it productive, but also it's sad because I wish I just listened to music, but I'm just like, yeah, let's listen to stuff that hopefully gives me a better opinion. But anyway, look, man, this is a wild shift, and I think that are we on the same page here? I think that if the Fed cuts by 50 basis points next week, that shouldn't trigger anything good to the market, because that is literally the Fed openly admitting that they're wrong. That's what 50 basis points is to me. Even though they could justify it, Powell could come out and say, well, here's why, but it's like there's no employment data to justify cuts. But I suppose a 50 basis points cut could maybe help real estate. The 50 basis points cut can maybe help the consumer. But a 50 basis points cut is certainly showing that the Fed miscalculated when the timing was appropriate. And obviously the market is crazy sensitive. The market is like a toddler. It's having a temper tantrum. And next week, I don't know what price is going to do. Nobody does. We're sitting here near all-time highs. Could it hit the all-time highs? Sure. And I will pick my battles and look, if we break the all-time highs, if we break and we stay, why not? Right? Destination 600, here we go on the SPY. But if we break and we fake, then it's probably settling back in, and it'll be more September volatility, whatever that looks like. I don't know. So it's not a hard trade. It's just position for it, right? I mean, I'm not getting really directional right now. I'm not really trading anything right now. I'll kind of wait and see. In fact, next week, Frank, maybe one of my classic like indecision trades, right? Where I'll buy a call and then I'll sell a call. I'll buy a put and then I'll sell a put, and I'll let volatility do its thing. So
Yeah.
actually, you want to look at that right now? I kind of want to price it in because IB's not super high right now.
Talking about a strangle.
It'd be a long strangle. Well, not technically. No, it'd be like a long fly, a long butterfly, because I'm putting 4 legs in. So a long strangle would just be 2 legs, but I'm going to go 4 because I want to sell against it. So let's take a look at that. Let's go SPY next week. And if we went out to next week is going to be the 20th for expiration. Now, I don't necessarily need to take the trade today, but I want to price it out and see. It's going to be more expensive because I'm doing a long option. But if we're trading at 562 and I buy the 563 and I buy the 561, if we have some volatility next week, part of me wants to favor like a 10 to 15 point move on the downside and then go like 10 points to the upside. So I'm gonna cut off. Like where's 570? That's like open territory here. 565. I mean, I'll go 570. I'll tighten it up to the upside. So I'm gonna sell for 850. I don't love this, but I'm gonna sell. That's a $7 position. That doesn't really cover the cost basis, so that doesn't help. But if I do a 551, I don't like this at all. Well, wait, I need to change this to a sell.
You think a 50 basis point cut? Not saying that it will happen, but the expectation of one, do you think that is probably going to lead sentiment to bullishness in the short term? And once it actually happens, if it happens, it's no longer a sort of a bullish signal.
That's a great point, because it totally could be, right? We could completely have this movie buy the rumor, sell the news, right? I mean, how many months have we been waiting to see like, okay, the Fed is finally going to cut? I mean, they've gotten away with so much free mileage of just talking this year that now it's finally here. And if this is as good as it gets, I also want to check in. I've got this one thing, PE, price to peak earnings. Let me check this. Okay, so look at this. Now, we're not at the same highs we saw back in April of 2021, where, it wasn't until like late April when the Fed started kind of their deleveraging and we had that bear market 2022. We're not at the all-time highs here that we saw back in 1999, 2000, but that is certainly something to watch. The average for the price to peak earnings tool is around 12.6, and we're trading right now around 27. And also, if we go to the, is it price to sales? Yep, price to sales. So I put both these in as favorites to like try to spot a toppy market. Okay, price to sales, we're pretty darn high, man. Like again, it's not at the same valuations we saw in late 2021. But what happened here, November, December of 2021, Frank? What happened in the market shortly after that?
In November of 2021.
Yep. Like November to January 2021, what happened?
I remember 2022 was a bearish market. So
that was the top, dude. November, December, January of 2021 to 2022 was the top. The tech market topped out in November. The S&P topped out in January, and we had a bear market right there. So that window was the top. And this price to sales history tool, we are creeping up on those levels again. Now, again, I don't want to sit here and be like, it's toppy, but we're way off of those levels. Like when this market had a top in 2021, it was way the heck back here, dude. So, I mean, to have a top in 2021 and drop 30%, we're above those highs. So, it doesn't really change anything. No, it just means like this created a top because the market was frothy and the market was overpriced, and so the market corrected. The same type of thing could happen where, do we like blow this top off here and then have a nasty trade later? Like, could that happen? I could see that happening, man. Like, this is why I can't commit to like, I've got to be bearish. I can't. I think what I'm probably going to do and just have to suck it up and do is I'm going to have to put on hedges to just protect my butt if something stupid happens to the downside. But if this market wants to keep doing what it always does over all of the wars and inflations and ups and downs and recessions and expansions and whatever we have. If this market just wants to keep finding ways to go higher, it's going to go higher.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.